Dr. Babasaheb Ambedkar Open University.
In this third part of the module 7 of cash book, we are discussing a two columnar of cash book. In two columnar of cash book, there are three types of two columnar cash book. One is cash and discount column, second is cash and bank column, and third is bank and discount column. So we have a three different type of two columnar cash book. As the businessman and the company has required, they can prepare the different type of two columnar of cash book. See here the cash and discount column of cash book, how it would be prepared. So two columnar cash book can be prepared in the way of the one more column would be added in the simple cash book. As we discussed already in the simple cash book, that cash column only prepared, but now in this particular two columnar cash book, we will prepare two column each side. That means on the debit side, if you are going to see the debit side, first column is date. Debit side, it means the receipt side. First column is date, then the receipts, then we are going to record the receipt number, then ledger folio number, then two column. Maybe if you are going to prepare two column for a cash and bank, then first is cash column and the second is a bank column. Now on the payment side, same way, dates, payments, voucher number, LF, then cash column and bank column. So in simple cash book, only one additional column would be added on each side. So in the bank column, if you are going to see the debit or credit, it may be happened because of the company or maybe a businessman having a opening bank balance as well as the bank overdraft. So in opening bank balance and bank overdraft, it may be happen or debit as well as credit, but in cash column, always opening balance only, and it would be always recorded on the receipt side. But in the bank column, it may be happened debit as well as credit also. As it is mentioned in the particular chart, you can see also the debit balance is known as a book balance and the credit balance is known as a bank overdraft. So now the total of the receipt sides of the bank column in the cash book, if it is more than the total of the payment side, it is known as a closing bank balance. But suppose if the total of the payment side is higher than the total of a debit side, that means on the receipt side, it shows as a bank overdraft. So in bank column, we may be having a closing bank overdraft also. Now see the another important concern for this particular way, that is the contra transactions. How the contra transactions would be happen in the particular when you are preparing a cash and bank column. As I already mentioned, there are three types of two columnars. One is a cash and discount column, second is a cash and bank column, and third is a bank and discount column. Here the contra transactions may be happened only in case of if you prepared a cash and bank column. In other cases, maybe the contra transaction and the contra transactions will not be happened. Now, what type of contra transactions would be happened? Here, for an example, if I want to take that, the example is cash withdrawn from bank and maybe the cash deposited in a bank. Suppose cash withdrawn from a bank. What comes in? Cash comes in. Who is a giver? Bank is a giver. Then what would be the journal entry? Cash comes in, cash account debit. Who is a giver? Bank is a giver, so the bank account is credited. So the cash account debit and bank account is credit. You are preparing a two columnar cash book. So that means the cash column also prepared as well as the bank column is also prepared. In that sense, cash comes in, it is called receipt, so it would be recorded on the receipt side, and bank is a giver, so bank will be recorded on the payment side. In this way, these transactions would be recorded in cash book in receipt side also and on the payment side also. So this is called a contra transactions, when any transactions would be recorded in the cash book both the side in cash column as well as the bank column, which is called a contra transaction, and this type of transactions is recorded in the particular cash book. Now moving to the next part, that is illustration number 2. Here I am taking an example for you, and that example is related to cash and bank. So instead of the cash and discount and a bank and discount, here I am going to take an example for you, that is cash and bank. That would be more important because if I want to explain what type of contra transaction and how the contra transactions would be affected to the cash book. Now see here, from this particular transactions, we are preparing a cash and bank 2 columnar cash book for Hitesh Brothers. So prepare the Hitesh Brothers column. This is the format where we are preparing a cash book. As you are going to see, both the sides we have 2 columns, cash and bank, and on the payment side also we have a cash and bank. Date, receipts, RN and LF is remain same. Date, payments, VN and LF is also remain same. Now moving to the first transaction. The first transaction is opening cash balance of rupees 11,000. Now opening cash balance is 11,000. Simultaneously on the same date we have a opening bank balance also rupees 10,000. Now see in the particular transaction, now we have both the balances only. So see the receipt side. If you have a balances, it would be recorded on the receipt side, and the receipt side is on the July 1st, 2 balance brought down, and it is 11,000 in the cash column and 10,000 in the bank column, that we have a opening balance. Now moving to the next transaction, that is date 3, goods of rupees 2,000 purchased for cash. Here when you purchase the goods for cash, that means the cash transaction is affected. What comes in? Goods comes in. What goes out? Cash goes out. Now see in the answer, when you purchase the goods, that goods comes in, it's affect the purchase transaction. So that is a purchase account is debit. What goes out? Cash goes out. So cash account is credit. General entry is purchase account debited to cash account, and it would be recorded payment side because of the cash goes out. So see here on the payment side, by purchase, opposite name of the cash would be recorded on the payment side, and in front of it 2,000 rupees we are going to write in the cash column, because of it is mentioned very clearly they paid cash. So that's why the cash column 2,000 rupees. Now moving to the next transaction, that is goods of rupees 2,000, sorry, that is already done. Next is date 7, goods of rupees 7,000 sold to Hemant for cash at 5% cash discount. Now 7,000 rupees sold to Hemant for cash. The cash is underlined. It means that this is a cash transaction. If you have a cash transaction, then and then only this discount will be charged. How much cash discount is offered? That is 5%. This 5% will be applied on 7,000 rupees. So 5 7s are 35. So 350 rupees, it's your cash discount. 7,000 minus 350 rupees, it comes to 6,650 rupees. Now see here, we are not preparing a discount column. This is a sales. Now it means goods goes out, but cash comes in. From whom we are actually receiving a cash? From someone else. But ultimately cash comes in, so cash account is debit, and to sales because of goods goes out. We are receiving a cash, that's why the 6,650 rupees it's going to write in the cash column, and in front of it, that is goods goes out to sales account on the respected date. Moving to the next transaction, and that is 12th. Advertisement expenses of rupees 1,500 and rent of rupees 700 paid by check. It means it is paid by check. Here it comes, the bank transactions comes into the picture. Both are the expenses, advertisement as well as rent, and both are expenses paid through check. So now see on the payment side, date 12, advertisement is an expense, as I already mentioned earlier. If any expenditures are there, as per the nominal account, all expenses are debited. And who is a giver? Bank is a giver. So first is advertisement expense account debited to bank account. So in the payment side, 12th date, payment side by advertisement expense, and in the bank column 1,500 rupees is going to write. The next expense paid is rent on the same date, again the same type of journal entry, rent account debited to bank account. So the bank is a giver, payment side by rent, and again the 700 rupees is going to write on the bank column. Now moving to the next transaction, and that is dated 19th, rupees 1,300 stationery expenses are paid. So now 1,300 rupees stationery expenses are paid. Here it is not mentioned whether it is paid by check or cash. If nothing is mentioned whether it is paid by cash or check, it's always understood and understand that this is paid by cash only. So now dated 19th, stationery is a one type of expenses. As per the nominal account rules and regulations, stationery expense account debit, and as I mentioned, nothing is mentioned here in this transaction whether it is a cash or bank. That's why we consider as a cash transaction. So by stationery expense account, write down the amount in front of it in the cash column, rupees 1,300. Now moving to the next transaction, and that is rupees 1,500 deposited in the bank. This is an important transaction because of it's a contra transaction. Now here see rupees 1,500 deposited in a bank. So 1500 rupees deposited in a bank, it means who is a receiver? Bank is a receiver. What goes out? Cash goes out, because of we are deposited amount in a bank, so cash goes out and a bank is a receiver. So journal entry of this transaction is a bank account debited to cash account. Now this entry will be posted. As I already mentioned, we are preparing two columnar cash book, and in this two columnar cash book, cash and bank, both the columns are prepared. So now these transactions would be recorded on the both the side, receipt side also and on the payment side also. Why? Because of for one account actually it is receipt, and for other account it is payment. Now as we already discussed, that is for bank it is actually a receipt, and for a cash it's a payment. So now see, in the first on the receipt side, as we already discussed that the bank is a receiver, so in the bank column we actually it is written a 1500 rupees, opposite name is cash, and as I mentioned when I explained the contra transactions, in front of cash in LF column we were written a C. That shows that it's a contra transaction. Now it is a receipt. Now we are going to record a payment transaction. What goes out? Cash goes out. So just see on the payment side, in the cash column it is written a 1500 rupees in the cash column, and opposite name is bank, so it in a payment column it is written by bank, and in LF it is also written a C. That means it's a cash contra transactions, and which would be written on the both the sides. Now see the next transaction, and the next transaction is, yes, daughter's school fees of rupees 700 paid by check from the bank account of the business. Fine, daughter's school fees paid, it's always a personal expense, and whenever it is a personal expense is affected, it's concerned a drawings account. So now the drawings account comes into the picture. Because of it is paid through bank, it's recorded in a bank column. So drawings, it's withdrawn and it's a payments for the business, that's why it would be recorded on the payment side. Now see on the payment side, dated is 23rd, and the journal entry of this transaction is drawings account debited to bank account. So the drawings account is actually recorded in the payment column, and the bank column 700 rupees paid school fees for a daughter, it is written a 700 rupees in a bank column. Next transaction is rupees 1300 withdrawn from the bank to pay fire insurance premium of the business. Now here 1300 rupees is withdrawn from the bank to pay fire insurance premium of the business. See the transaction very carefully. Here it is not written it is paid, it is just withdrawn the amount from the bank for the payment of insurance premium. That means it does not mean it is paid, right? Ultimately it's a contra transaction. How much amount of cash is withdrawn from a bank? 1300 rupees withdrawn from a bank. So what comes in? Cash comes in. And from who is a giver? Bank is a giver. So cash comes in, cash account is debit, bank is a giver, so bank account is credit. Now as the cash account is debit, it's a receipt for cash. Now see on the receipt side in the cash column, it is written a 1300 rupees in the cash column because of it is a receipt. Opposite name is bank, so it's written a bank. As I mentioned, it's a contra transaction, so C is written in the LF column. Now see on the payment side, who is a giver? Bank is a giver. So for bank it is a payment. So now on the the payment side, in the bank column 1300 rupees written on the payment side, and opposite name is cash. So date 25 in the payment side by cash, and in LF it is written C, and in the bank column it's written a 1300 rupees. Now see the next transaction, and the next transaction is fire insurance premium paid dated 27. So now fire insurance paid 27. Just see, fire insurance premium is an expense, so expense account as per the nominal concern, it's always debit. Fire insurance premium account debited to cash account. So on dated 27 on the payment side by fire insurance premium, cash column 1300 rupees. Because of it is not mentioned whether it is paid through check or cash, it's understood that it is paid always through cash, so it is written in the cash column rupees 1300. Now moving to the next transaction, and then this is the last transaction of this two columnar cash book, that is check of rupees 2400 received from Lata, which is deposited in the bank. Now we received 2400 rupees of check from Lata and deposited in a bank. Fine. Now see, it is deposited in a bank, that the bank is a receiver. Who is a giver? Lata is a giver. So the journal entry of this transaction is Lata's account debited bank is a receiver, so bank account is debited, and Lata is a giver, so Lata's account is credited. So now here it is receipts, that's why it is recorded on the debit side, receipt side. Opposite name is Lata, so Lata is written on the receipt column, and the amount deposited in a bank, so bank column 2400 rupees, dated is 30. This is what all about the part of the last transaction. Now see, we are going to close this cash book one by one. There are two columns, one is a cash column, the other one is a bank column. First, make a total of the cash column. As I already told you, in the simple cash book, cash always have a surplus on the receipt side, so we will make a total of the cash receipt side total, that is 18,950. Then we'll have to make a total of the payment side of cash column, and after we will deduct that payment side of total from the 18,950, we have a closing cash balance in our hand, that is 12,850 rupees. So on the dated 30 by balance carry forward, we will write in the cash column, that is 12,850. Now we will close the bank column. Here in the bank column, anything is possible. Maybe the credit side total also can be higher, or maybe debit side total also can be higher. So we need to make a total on the both the side, debit as well as credit. Whichever side the total is higher, the other side total would be deducted from the lower side, and find out the differences. In this case, in this particular problem, we have a total of the debit side is higher, that is 13,900, and on the credit side total is lesser than this 13,900, would be deducted from it. So balance closing in your hand, that is 9,700, which is written on the date 30 in front of the balance carry forward in the bank column, that is 9,700 rupees. This is what all about the two columnar cash book of cash and bank column.
Dr. Baba Sahib Ambedkar Open University.